It seems as though now the handouts have all been passed on. We would like to now begin the presentation on the financial year 2016 third quarter financial results of Nissan Motor Corporation. Despite the windy, rainy, and snowy weather, we would like to thank you all for coming here. Today we have CVP Mr. Tagawa, who will be the speaker for the presentation, and after the presentation is completed, we will be having a Q&A session. The presentation and Q&A are going to be aired on the internet, and we would like to solicit your kind understanding in advance. The floor is yours, Mr. Tagawa, please.
皆さんこんにちは。
Ladies and gentlemen, good afternoon. Thank you for joining us for the announcement of Nissan's fiscal year 2016 nine-month results. Overall, our business is solid. We continue to generate strong automotive free cash flow, and we remain on track towards the achievement of our full-year unit sales and profit guidance. Today, I will briefly review our sales performance and financial results for the 9 months ending December 31st, 2016. Following the presentation, my colleagues and I will be glad to answer your questions. As briefly mentioned earlier, for the period we are reporting today, our business performance was solid despite the adverse impact of year-over-year currency exchange headwinds. For the 9-month period to December 31st, consolidated net revenues totaled 8.26 trillion yen. Operating profit totaled 503.2 billion yen, which equates to an operating margin of 6.1%. Net income was 414.2 billion yen, which represents a 5% net margin. Free cash flow for the automotive business was 166.1 billion yen. Here, please note this is after the acquisition of the 34% stake in Mitsubishi Motors. Excluding this acquisition, the auto business generated very strong free cash flow of 403.5 billion yen. And we ended the period with an automotive net cash position of 1.07 trillion yen and a very solid balance sheet. You may have noticed that the reported results for revenue, operating profit, and net income are below the prior year's actuals. Here, the shortfall is completely explained by the substantial negative year-over-year forex impacts, which were not entirely offset by solidly improved operational performance, particularly on the cost side of the business. To give you a better picture of the underlying improvement, this chart compares our 9-month revenues and operating profits to the comparable prior year period on the constant currency basis. On this basis, net revenues would have been 9.43 trillion yen. Operating profit would have improved 30.1% to 764.6 billion yen, reflecting an operating profit margin of 8.1%. Before going into more detail on the financials, I first would like to outline Nissan's sales performance in the first 9 months of fiscal year 2016. During the 9 months ending December 31st, global total industry volumes, or TIV, reached 67.16 million units, an increase of 4.5%. Nissan's total unit sales were 3.99 million units, an increase of 2.6%. However, for the third quarter alone, Nissan outperformed the industry with sales increasing 8.3% to 1.38 million units. Looking at our key markets in detail. In Japan, TIV increased slightly by 0.9% to 3.5 million units. Nissan saw unit sales decline by 10% to 344,000 units, resulting in a market share of 9.8%. The decline was due mainly to our suspension earlier in the year of the sales of Days and Days Roox minicars. We have now resumed sales of the Days and Days Roox minicars, and we have successfully launched the all-new Serena and the Note e-Power. As a result, Nissan sales increased 13.1% in the third quarter versus 4.9% for the industry. In China, where our sales performance is measured on a calendar year basis, TIV for the 9-month period was up 13% to 18.59 million units. Nissan sales increased 8.2% to 929,000 units, representing a market share of 5% for the period, reflecting solid demand for both Nissan and Infiniti models. For the 12-month period to the end of December, our sales totaled 1.36 million units, which was up 8.4% versus the prior year period, but behind overall TIV growth. This was due mainly to low demand in the market for light commercial vehicles. Our sales declined 4.3% in the 12-month period to December 31st, resulting in a 5.7% market share. In the same period, however, sales of our passenger vehicles increased 10.9%. In North America, TIV increased by 1% to 16.26 million units, and Nissan outperformed the market by delivering record unit sales of 1.58 million units. Furthermore, in the third quarter, Nissan sales increased 7.9% versus a TIV increase of 1.7%. In the United States, TIV was down 0.4% at 13.46 million units for the 9-month period. However, Nissan sales rose by 4.2% to 1.16 million units, equivalent to a market share of 8.7%, amid strong demand for the Rogue and Altima. In Canada, sales rose by 0.4% to 104,000 units, resulting in a market share of 6.7%. In Mexico, we remain number one with unit sales increasing 17% to 313,000 units, equivalent to a market share of 24.9%. In Europe, including Russia, our sales totaled 542,000 units. However, for the third quarter, while TIV increased by 2.9%, Nissan sales increased 4%. Excluding Russia, sales rose by 5.5% to 474,000 units for the 9-month period. This resulted in a market share of 3.6%. In Russia, the market continued to be impacted by the weak ruble and economic uncertainty. Our sales decreased 25% to 68,000 units, resulting in a 6.1% market share, but remain in line with our expectations. In other markets, our sales decreased 3.9% to 596,000 units due to overall weak industry demand. However, in the third quarter alone, we outperformed the industry. For the 9-month period, unit sales in Asia and Oceania decreased 3.6% to 253,000 vehicles. Sales in Africa and others were down 14.3% to 64,000 units. This decline is in line with the TIV reduction in the markets where we are active. Sales in Latin America increased to 132,000 units, and the Middle East decreased to 147,000 units. Moving to the detail of our financial results, as with previous quarters, Nissan is presenting its financial performance under the equity accounting method for our joint venture in China. On this basis, consolidated net revenues totaled 8.26 trillion yen. Operating profit totaled 503.2 billion, which equates to an operating margin of 6.1%. Net income was 414.2 billion yen, which represents a 5% net margin. Looking at the operating profit movement, volume and mix produced a positive impact of 126.6 billion yen. The increase in selling expenses resulted in 163.8 billion yen negative movement. Cost items, including purchasing cost reduction efforts, resulted in a net savings of 214.3 billion yen. R&D expense decreased by 22.8 billion yen. Manufacturing expense increased by 9.7 billion yen. Other items had a negative impact of 13.1 billion yen. On a constant forex basis, the net total of these operational items results in a year-over-year operating profit improvement of 177.1 billion yen, or 30.1%, resulting operating margin of 8.1%. Forex, however, had a negative impact of 261.4 billion yen, resulting in an actual reported operating profit of 403.2 billion yen, equating to the operating margin of 6.1%. On a management pro forma basis, which includes the proportional consolidation of our Chinese joint venture, our key indicator showed that net revenues totaled 9.01 trillion yen. Operating profit was 601.9 billion yen. Net income totaled 414.2 billion yen. Automotive free cash flow was 253.4 billion yen. And we ended the period with automotive net cash of 1.26 trillion yen. On a pro forma basis, our actual operating profit margin was 6.7%. If we did not have significant headwinds by Forex, the operating margin would have been 8.5%. Relative to our outlook for the full fiscal year, we are maintaining our previously announced financial and volume guidance. Nissan continues to maintain a progressive dividend policy reflecting our profitability and solid free cash flow generation and remains committed to a minimum payout ratio of 30%. Furthermore, we completed the share buyback program of 300 million shares last November. For the 2016 fiscal year, we are maintaining our previous projection of increasing the full year dividend by 14.3% to 48 yen per share. In summary, despite Forex headwinds, our business has performed solidly and we have continued to leverage improved operational efficiency. As I said at the outset, we continue to generate strong free cash flow and we have a healthy balance sheet. A proof point here is the one-notch credit rating improvement for both long-term and short-term debt announced by Moody's in January. Our performance is on track. Looking forward, we are committed to growing our business in a sustainable way to deliver solid earnings, positive automotive free cash flow, and attractive shareholder returns. Thank you for your attention. Thank you for your attention. Now, we would like to move on to the question and answer session. If you have a question, please raise your hand. We will bring you a microphone. Please use the microphone when you are asking the question. Please give us the name of application and your name, please. I would like you to limit yourself to 2 questions per person. Thank you for your cooperation in advance. Now, we would like to entertain questions. Please raise your hand. Oh, we see hands, so from the front. Yes, Hans-san.
Hello, Hans Greimel from Automotive News. I'm hoping you can give us a little snapshot of what happened in the third quarter. I noticed that operating profit's down, but net income is up. What caused that to happen? And also, operating profit is down in North America. Can you talk a little bit about how your North America business is doing in terms of incentives? The final question would be, what are your expectations from this week's meeting between Mr. Abe and Mr. Trump?
Hi. Thank you for your question, Hans. Okay, let me translate the question into Japanese to make sure. First one is the third quarter. Operating profit and net income. Net income is rising while operating profit is deteriorating. Why? That was the first part of the question. And especially the one in North America. In North America, operating profit is declining. And you want to know the causes, including incentives. And the last one, the summit meeting between Prime Minister Abe and President Trump. What do you expect from this? Okay, from the simplest question, the last question. Nissan Motor in Japan, we are a Japanese car maker. And in United States, we have a lot of employment and presence, as you may know. So hearing that there is a summit meeting, we will be paying close attention to what will happen to the summit meeting. That was the first part of the question. Next is about the third quarter. Net income and operating profit was the question. With regards to net income, in prior year, there was a one-time negative contribution in non-operating aspect, which was pretty significant, especially in this fiscal year. It doesn't mean that there was a big positive this fiscal year. Rather, there was a big negative last year. That was the reason. And non-operating, the equity profit, especially mainly about Renault, Dongfeng, Nissan. Here we see an improvement. So that's why net income is slightly improving compared to the prior year. And third quarter, North American operation profitability is falling. With regards to this question, I would like to give you a summary of what's happening. In the third quarter, we see a deterioration in particular, so let me answer your question. First off, in the third quarter alone, across the company, the forex deterioration was 81.6 billion yen. This was a negative impact, out of which North America currency-related negative, US dollars and Mexican peso, Canadian dollars. Out of the 81.6 billion yen, this accounted for more than 70 billion yen, 70. Let me give you a breakdown. Yen-dollar rate was about 50 billion yen plus, and peso was about 14 billion, and Canadian dollar was a little over 9 billion yen deterioration. So Forex was a headwind for us. And these headwinds were offset through cost reduction and model mix improvements. For example, Armada, highly profitable model like Armada. With this, we are enhancing the model mix and raw materials cost reduction. With these contributions, the negative impact of Forex is practically offset. But as you asked, on the other hand, there are rising expenses incentive. And used car prices falling. As a result, the residual value of leased cars is deteriorating. And on top of this, the sales finance, the non-performing debts are deteriorating. So overall, in the North American operation, in the third quarter, we see a deterioration in particular. These are the causes behind this. In the fourth quarter, we are thinking of several countermeasures and looking at that. We believe that things will be better compared to what we see today.
はい、ありがとうございます。
Okay, thank you. Next person.
はい、日本経済新
Hoshi of Nihon Keizai Shimbun newspaper company. One is on North America and second on Trump administration. First question about the North American operations. The number of units is strongly up. The peak out will be mostly in the U.S. market, and the competition has become intensified, which has been reflected in the performance announcements of most of the auto manufacturers. And region-wise, Nissan is making much money and profits in the North American market. And how do you wish to make this profit-making center sustainable for Nissan? And light truck percentage. Q3 or on full year basis, to what level has it gone up, or are you trying to go up? Light truck ratio, to what extent in comparison to large passenger vehicles is Nissan trying to increase this proportion? Second, President Trump is talking about the NAFTA review and the border tax. And these two tax reforms may have significant impact to auto manufacturers. At this juncture, the specific policies have not yet been finalized, but there is quite heightened momentum in terms of debate. Mexico production rate is high and U.S. Manufacturing ratio is close to 50%. So how do you intend to respond specifically? Thank you very much for those questions. Then, let me take the easier second question first. As far as the policies of the new U.S. administration is concerned, since the beginning of this year, our CEO, Mr. Gon, has been saying that our performance is growing strongly, and there's nothing to add beyond what Mr. Gon has been saying. On the first question with regards to our North American operations or the U.S. market, specifically in the midst of heightened competitions, Hans had asked me the previous question, and I responded by saying that the incentives have worsened. And that has happened at Nissan, and competition has intensified. In the first quarter, in the case of Nissan, passenger vehicle ratio is high. That was one of the reasons why. And I said that in our results announcement. Now that you've asked this question, at the moment, let's look at the ratio of passenger cars. Up to 2015, at Nissan, it's about 55 to 60%, 55 to 60% passenger vehicle ratio. Titan, Almada, Rogue, Murano, these all new models have been introduced that had made great hits. So that has pushed down the ratio of passenger vehicles. And at the moment for Q3, if we look at the cumulative 9-month basis, it's split 50-50. It's gone down to around 50. And if we look at Q3 alone, the truck ratio is 54% and passenger vehicle ratio 46%. So there has been a turnaround in terms of weight. But if we look at monthly January sales at the industry level, truck ratio has gone up further to 63%. So we consider truck to be an appealing segment, a highly profitable segment, and therefore we want to increase our sales in this segment. As far as TIV is concerned, there are still mixed views. But from 17.5 million of last year, is there going to be significant increase or drop? No, we don't think so. And in the midst of such views, Nissan or Infiniti, with the new model introduction, we have been increasing our share. On the other hand, that has also led to incurring costs. So from this point and beyond, we will also inject efforts into control in order to control cost. And finally, in Q3, incentives had increased slightly. One of the reasons is in the United States, there is the change of model year. Model year 16 in most companies that has already disappeared. But for model year 17 and 16, it's still remaining. And therefore, that incentive had been recorded in Q3. But because of the truck mix change, if we see the disappearance of model year 16, we do not believe that incentive level will exacerbate any further than where we are today. But at any rate, North America and US or North America profit and sales volume growth, we would like to continue to balance those two indicators.
Thank you. Next question. Yes. The person in the middle, please go ahead.
日経
Nikkei Shimbun, Shiraishi is speaking, talking about President Trump. The president has been saying the cars that are sold in the United States should be localized in U.S. That's what we have been saying to the car makers. Or at least that's what he has been encouraging the car makers to do so. At Nissan, for example, within U.S., do you have a plan to do something about increasing the capacity of the vehicle or build a new production plant in U.S.? Do you have this discussion underway within the company? That's my first question. And the second one, with regards to NAFTA, within this year in Mexico, you'll have a joint venture plant with Daimler, which will be starting the operation. So is there any change in the schedule of opening of the new plant? Thank you for your question. Starting with NAFTA or the new plant, possibility of new plant in U.S. Well, as Mr. Gon has been saying in the beginning of the year, car makers or Nissan Motor are complying with regulations and laws in each market and countries. That's how we have been running our business. So suppose the regulation or standards are revisited, we will comply accordingly. With regards to the joint venture project with Daimler in Mexico, as of today, we are on track in line with the schedule. Within next fiscal year, by the end of fiscal year 2017, Infiniti models will be produced. There is no change in the schedule. Thank you. Okay, the person at the very front with a mask, who is wearing a mask. Asahi Shimbun, Aoyama is speaking, talking about the Forex. President Trump, when he won November and yen depreciated since then, And based on this trend, the full year guidance will not be revised upward. Why? That's my first question. And how do you foresee the forex going forward? I'm sure it's uncertain, but there's higher volatility in the financial market. Is there any concern around this? These are my two questions.
はい、ありがとう。
Thank you for your question. Nissan Motor. Last May, we announced the full year guidance and we haven't revised it. When we announced the full year guidance, 105 yen to the dollar was the assumption. Other car makers in the first half, in the different timing, they changed the forex assumption to 100 yen to the dollar. And these are the people who are revising upward. But we have been maintaining the same assumption. And as of today, yen dollar rate average in the end of Q3 was 106.6 yen to the dollar. So there's not much of a difference from what we initially assumed. And in the beginning of the fiscal year, negative contribution forex was 250 billion yen. That was our projection, out of which yen dollar rate is 200 billion yen. That was a negative contribution that we anticipated for yen dollar rate. If the yen dollar rate remains where it is today, I think the negative contribution may be smaller. And I gave you the 9-month performance in my chart. In the initiation, 250 billion yen of negative contribution is what we assumed, and 260 billion negative contribution is what we suffered in the end of Q3. Yen dollar rate is practically the same with the assumption or a little better, but the commodity related currencies like Mexican peso, Canadian dollar, and Australian dollars, these are the bigger negative contribution. In yen dollar rate, looking at the latest forex, it's about 101 yen or 102 yen. If this remains as it is, it may be better. But other currencies, frankly speaking, the negative contribution to other currencies has been bigger. So this negative contribution is tried to be compensated for with a cost reduction, volume increase, and reduction of the raw material costs. This is how we are going to offset the negatives. But compared to other car makers, we have not revised downward. We haven't changed the assumption of forex. That is why we maintain the full year guidance.
ありがとうございます。他にご
Thank you very much. Next question? Yes, the person at the back. Weekly Diamond, my name is Yamamoto. Other than North America and China, I have a question on other markets. If we look at the operating margin for the other region, Q3 minus negative operating margin. North America and China are regions and markets where you are doing well, including sales volume, but you are seeing surplus of capacity in other regions other than North America and China. So, what are the plans to improve the situation in these other markets, which would be the key to continued growth? Thank you. Thank you very much. You have pinpointed the crucial key. In the emerging markets, which are the center of the other markets, the current sales volume or profitability is not the level that is satisfying for Nissan. Nissan Power 88 is our midterm plan. And in these areas, including Brazil or India, and other countries, we have made several investments, and yet the utility rate has not reached the level we wished to see. But in Q3, if we look at Q3 alone, in terms of the number of units, in comparison to the first half, the negative degree has lessened, and in the case of Brazil, Kicks, new model was introduced, and in Brazil, the cumulative to Q3 finally went positive year on year in terms of sales volume, and 0.6% improvement of market share to 3.1 has been achieved, and on India, Datsun Ready Go was introduced. So in these emerging markets, we are seeing somewhat of a slight improvement in terms of sales volume. We are still suffering from the forex or the low utility rate of our plants. So the profit levels are quite frustrating, but going forward, not just US and China, but we hope to be contributed by returns on investment from these other markets.
はい、ありがとうございます。
Okay, thank you. Yes, the person in the middle, please. Yomiuri Shimbun, my name is Ozawa. I have a couple of questions. The first one is about the alliance with Mitsubishi Motors. Previously, you have making a projection of the synergies, cost reduction, the joint engineering, and these impact in terms of the fiscal term. When will it be largely reflected in your bottom line? Could you give us the timing? And what is the immediate synergies that you will enjoy to the extent that you can disclose? The second question, electric vehicles. This week, Honda announced a partnership with Hitachi about EV. And from the air end, other car makers are becoming active in EV. And the EV segment or EV market may grow. And there's a high likelihood that the EV market will grow. How do you react to other car makers' activities, and how do you interpret or how do you see this TIV growth of EV? Starting with the alliance with Mitsubishi Motors and the synergies out of it. In the end of October, we put a stake on Mitsubishi Motors. From the third quarter, in terms of profit contribution, for example, equity earnings, equity method is applied to Mitsubishi Motors. So from 20th of October, we have a 40-day worth of profit. So the impact is not that big, but there is a slight positive contribution to our bottom line. We are going to work out the details of synergies going forward in order to increase the profitability of each company. As I have said in the past, the immediate synergies include purchasing cost reduction. This is the main portion that will come first. After the 20th of October, both companies have been benchmarking the parts cost and looking for the possibilities to join efforts. And we are seeing some reductions out of this, and this will continue. And when it will be visible in the financial figures, well, that will happen after fiscal year 2017 or onwards. Fiscal year 2017 in synergies, 24 billion yen and 25 billion yen of Mitsubishi Motors. These are the objectives of synergies that we set forth. In fiscal year 2017, these are the synergies that we will enjoy. In fiscal year 2018 at Nissan, is 60 billion yen that we are projecting out of the synergies, and this guidance remains unchanged. And talking about the electric vehicles, EV, electrification. EV, the public is paying more attention to EV, and larger number of people are more interested in EV, and the car makers are starting to put efforts in EV. For us, this is a good news. Yes, this will intensify competition in the market. However, as a result, we can reduce the cost. Suppliers will be making investments, and the charging infrastructure will be developed. Yesterday, Volkswagen was making an announcement, if I remember correctly. So in addition to these benefits, EV, once you tested EV, you will know the benefits. But people have a lot of concerns before they buy one. But EV, if we see a larger number of EV users, and rather than only having Nissan doing it, Tesla and other car makers will introduce EV, and this will benefit the customers, and customers will know how beneficial EVs are. Note e-Power is introduced, and many customers like this because it's an EV driving performance with a longer driving range. These are the benefits that we foresee. So this is a good news for us. With regards to announcement by Honda, I'm not in a position to make any comment. Motor, battery, inverter, there are relevant components to EV, and there are a lot of suppliers around it, and this will increase the number. As a result, competition will rise and the cost will go down. In the zero emission and EV, we are pursuing to be the leader, and this is good for us. Okay, thank you very much. The person in the middle, please.
Hi, Sean McLean from the Wall Street Journal. If I could just return to your full year projection and how you maintained it, and talk a little bit about what you mentioned in the financial paperwork here about the volatility in the automobile market. What is that volatility that you foresee? I know that you've been sort of lucky in keeping your 105 forecast, but you've also declined to move it in previous quarters when others have. And secondly, on North America, you, compared to your peers, get a smaller portion of your parts from the U.S. What sort of moves could you possibly make to ramp up U.S. sourcing of parts in case something happens?
はい、
To repeat your question, first of all, your question was on full year projections, and there are positive factors and negative factors, but once again, why are we not revising the full year projections? That is my take of your first question. And the second question is the parts procurement, local procurement in the United States, and our thinking behind going forward. On the full year projections, I already talked about the exchange rate, and we are seeing headwinds there, and raw material and the cost we pay for raw materials. Not the procurement cost, but in terms of raw materials, this is going down, so this is a positive. So, and on the other hand, the sales cost is increasing, so there are positive and negative factors. And if we net out the positive factors and negative factors, we conclude that for the time being, we don't need to revise. Yes, there are fluctuation because of the price volatility or volatility in the market, but if we net all of those impacting factors, we do not believe that it would be necessary to change the guidance that we had announced at the beginning of the fiscal year. Your second question is with regards to local procurement of parts and components. This applies not just for North America, but for Tier 1 as well as Tier 2 and lower level of supplies. We are trying to increase local procurement in all markets. This is to hedge against the volatility of the exchange rate as well as policy change that may occur in any administration. So it's not just local production of the cars themselves, but we also are endeavoring to increase the local procurement rate of parts and components. Thank you.
それでは、
Okay, there are two people who are raising the hands, and these are the last ones who will ask the question. The first one over there, please. Thank you for the opportunity. Toyo Keizai Kigawa speaking. I have a couple of questions. One is about the approach to the production. U.S. is where we have a higher proportion of light-duty truck. And Smyrna and Canton, and the utilization rate in these two plants are rising. Last year, for the first time, you topped 1 million units. That's what I remember. And probably in terms of production capacity, you only have 100,000 units more of capacity. Light-duty truck, SUV in particular. Is there how much leeway do you have to increase the production of these cars? And today, from Japan and South Korea, you are supplying Rogue to US or North America. So in US, SUV, light-duty truck, in order to increase the capacity, do you have a plan to make an investment to increase the capacity of SUV and light-duty truck in US? And 1 million units of production in Japan is what you want to maintain. So production in Japan and production US, what's your approach to the allocation between the two? And the other one is the Daimler's joint venture plant in Mexico, Compass. The other day, Dr. Tsech of Daimler said that common platform or common parts utilization between Nissan and Daimler, that you are discussing what to select and what not. That has been the news from Germany. Infinity will be introduced in 2017, you said, as scheduled. So this joint project, is there any, do you have to modify this because of issues? How do you see this? Thank you for your question. Here again, starting from the simplest one, the second question. Project in Mexico or the projects in general with Daimler. In 2010, since we established a strategic cooperation with the company, compared to the initial assumed 3, we have more than a dozen. So we are expanding the scope of the joint efforts with the company. There are modifications in each project, or that may be possible, but overall, they are successful. And as I said, there's no change in our plan. If Daimler, I'm not sure whether Daimler will have to modify. You can ask Daimler for the answer. And the first question, talking about the production in US and Japan. As you indicated, production in US, partially, we use a 3-shift operation. So we don't have much leeway to increase the production going forward. But for example, Titan, for example, partially, we are going to add further variations. And the latest performance Titan, we are selling in January, it was 3,000 units per month, but in December, we sold 4,000 units. Initially, we projected a higher sales, so there's a little bit of a leeway to increase the production, but there's not much of a big leeway to increase the production. And talking about production in Japan, 1 million units. Production in Japan, as you say, over the past 2 years, we were in the higher level of 800,000 units. In the third quarter, or e-Power, Note e-Power in Japan, and Serena are strong. So production volume is rising in Japan. The production in Japan in 9 months increased by 16%, 730,000 units, if I remember correctly. In fiscal year 2016, there's a likelihood that we can attain 1 million units. That's what we are planning to do. Therefore, in the past 2 years, we couldn't reach 1 million units, but we will recover 1 million units. Especially the products in Japan are successful, and this is a large contributor. Thank you. That's all from me. Thank you. The last question, please go ahead.
Nakao, Kanaga newspaper, thank you very much. One question with regards to finance. Negative interest rate policy has been introduced, and this month commemorates 1 year. And 90 billion yen of corporate bond was issued last spring at Nissan Motor Corporation. After 1 year since the negative interest rate policy was introduced, how do you assess the impact of this policy? In terms of the impact of the monetary policy, the following is my interpretation. BOJ has introduced the negative interest rate policy, and the objective is the exiting from deflation, and this is a demonstration of their strong will. Departure from deflation. Our psychology, consumer sentiment, or business sentiment, it takes time for such sentiments to drastically change. But this is a very strong message delivered by the central bank of this nation, and we are hopeful that there would be effects coming out of this policy. And from the perspective of a company like ourselves, we are making use of the historically low interest rate environment by issuing corporate bonds, and we want to reap the benefits. Thank you very much. It's exactly the time we had intended to close, so we will now conclude today's results presentation. Once again, thank you very much for coming.